We'll talk about Dr. Reddy's Laboratories in the third quarter. They've reported almost a 10% jump in their net income for the quarter gone by, and this compared to the same period last year. Also, its India sales have grown 5% if you consider the year-on-year comparison. And margins, if you look at that picture, you're seeing a decline 28%. Let's connect with Erez Israeli, the CEO of Dr. Reddy's Laboratories, joining us on the show. Great to have you with us, sir. The U.S. revenue growth is up about 5% on a sequential basis. Tell us about the growth drivers this time, sir. Any change that you're seeing in the business environment in the U.S. in the third quarter compared to what we saw in the second quarter?
So thank you so much. There is no change in the business environment per se. The environment is still about focus on consistency of supply, service, and ability to address certain shortages that are in the market. Most of the discussion with the customer is about service. And we are indeed, most of the growth is picking up of share of base products, and obviously we are continue to do well, and generic Revlimid is still a meaningful product for us. And likely that this will continue also in the next coming quarters.
Also, Mr. Israeli, I'm looking at your performance in India, and it has been lackluster. What is the roadmap for growth when it comes to the Indian market? By when do you think we can see some double-digit growth when it comes to India?
Yes, so our growth is also attributed to the fact that we acquired a brand named Sidmus, and is actually working really well as per the plan. The price erosion impacted that growth, and also at the same period of time last year, we had certain divestitures. So actually, if you take these two out, we are in double digit already. We are aiming for double digits from the next quarter or the quarter after. We should see it in full swing, primarily behind certain brands that we believe that there is a tailwind and there is an opportunity to grow. Those brands should do better than the market. In addition to that, we are collaborating with companies around the world to bring innovation to India in three areas. One, NCEs and NBEs, new products better than the standard of care. The second is OTC nutraceutical, and the third is digital therapeutics. For example, we launched Nerivio, and it is doing well. So overall, I'm expecting from the two levers, either the big brands that we have today, as well as the new innovation, to grow meaningfully in India.
So that's about the Indian market, Mr. Israeli, and I take the points that you're making. But what about the US market? Despite a better show over there, the gross margins, they're down for the global generics portfolio that you have. Is this because of higher price erosion? And of course, from the next quarter, can we see you bounce back above the 30% kind of margin?
First, I think we have a healthy margins. We have 29% EBITDA and 37% ROCE. This is healthy. We normally aim for 25%. Also, gross margins that are in the high 50s is normally very healthy. Normally, those fluctuation is a situation of a mix of products, mix of market. We do have price erosion as per the business model, but relatively, the level of price erosion is more moderate than it used to be in other years, and relatively stable.
Fair point, Mr. Israeli. But what about the M&A pipeline? Any plans in the near term? Any opportunity that you're spotting? Also, the board has approved the fund infusion of 650 crore rupees in a wholly owned subsidiary. Where do you plan to utilize? Where is the deployment likely to happen for this money?
So on the M&A space, we are always looking for opportunities, and we are always discussing opportunities. in all the areas of our strategic focus, whether it's India or outside of India, we are looking, and absolutely possible that we will announce deals. We are licensing in products. We are discussing acquisitions as well as collaboration. So all of those are in the making, and some of it obviously eventually will bear fruit. As for the investment that you are talking about, we have a fully owned subsidiary that called APSL, which is a subsidiary that is dealing with our CDMO activities for both small molecules as well as large molecules. Part of it is for repayment of internal loans, so it's a fully owned subsidiary. So, as per the accounting, they need to repay the loan, and we are investing in the equity of that. And part of it is to finance facilities, labs, and things that they need for their future expenses.
I also want to ask you about the Red Sea crisis, because that has caused a certain amount of disruption for several businesses. Tell us about the kind of fallout that you would have to experience. Can we expect some higher logistics costs, for example, in the fourth quarter? Is that the likely fallout of it?
We do not see a tangible impact. We did have to use alternate routes in certain areas that have a little bit of, we had to pay a little bit more for the cost, both insurance as well as for the shipping. But overall, there is no material effect on the company outcome.
Mr. Erez Israeli, we wish you great luck for your growth plans for the future, and we hope any fallout of this Red Sea crisis, of course, like you're saying, it's not going to be substantial. We'll keep monitoring it. But thanks indeed for joining us with your perspective on the quarter gone by and the